back. Business confidence, another blow for the economy. Sentiment among South African business people remained uninspiring in July. The Chamber of Commerce and Industry's Business Confidence Index declined by 1.5 points between June and July. It recorded a reading of 107.3 points from 108.8. This is as businesses continue to battle power cuts and several other challenges affecting economic activity, as well as the effects of the Russian war in Ukraine affecting certainty right now. 8 real economic activity indicators on the index had a negative impact on business confidence. The most significant negative impacts were from declining merchandise export volumes, followed by reduced new vehicle sales, lower import volumes, as well as fewer tourists. Saki says the weakness in the index indicates that the business climate is not encouraging economic activity in general. It says the weakening rand against major trading currencies and a decrease in the real value of building plans passed also adding to the negativity. The tighter monetary policy through higher interest rates to confront inflation weighed on real economic activity. When compared to the same time last year, business confidence, the index was down by 3 index points. We were looking at this earlier. Pan-African Bank, Standard Bank, releasing their half-year results today. In the 6 months that ended in June, the bank reported robust headline earnings of 21.2 billion rand, an increase of 35% relative to the same period last year. While they achieved a return on equity ratio, a key measure, the bank's performance of nearly 19% compared to less than 16% in the prior year. The bank admits that the higher interest rate environment did help its bottom line, although it also notes that credit impairments rose in the first half relative to the previous year.
Standard Bank posted strong double-digit growth in headline earnings in the first half, with all its key metrics performing well, including the fact that it was able to cut its operating costs in the period.
This performance was underpinned by robust earnings growth across all our banking business and our insurance and asset management business. The group ended the period with a strong common equity Tier 1 ratio of 13.4% and net asset value grew by 10%.
Despite its positive results, Standard Bank did note that some customers were struggling to keep up with their loan repayments, given some of the socio-economic challenges in the country.
Credit impairment charges increased across all portfolios, reflective of the difficult macroeconomic environment, and the credit loss ratio increased to 97 basis points.
The bank says it believes inflation hit its peak by the end of June and that the repo rate would remain flat at 8.25% for the balance of this year. It expects inflation to continue to moderate and sees local interest rates coming down by 1.25 percentage points during 2024. And when it comes to concerns around South Africa being excluded by international partners due to misapprehensions about its relationship with Russia, the bank is optimistic that won't happen.
In our view, the risk of South Africa losing AGOA preferences or of sanctions being imposed has receded. During the half, President Ramaphosa visited both Kiev and Moscow to encourage negotiations, and senior government officials were visiting Washington earlier this year to clarify South Africa's stance. Earlier this month, U.S. Deputy Secretary of State Victoria Nuland is reported as having said that while she did not want to preempt the decision by U.S. lawmakers on whether South Africa would retain AGOA status, President Ramaphosa's statements would help to motivate for an extension.
Standard Bank shareholders are set to be paid out an interim gross dividend of R6.90 a share. That's up 34% on the first half of 2022. Nompumelelo Siziba, SABC News, Johannesburg.